Very good morning, friends. I am Nalinaksha Swami, welcoming back to my channel, Smart Index Edge. I've created two indicators were noteworthy. They are episodic pivot and rolling pivot reversal magic. Episodic pivot will tell you where the buyers, call writers, and put writers action immediately when that event is triggered. It will reflect, and I've coded for that, and that you uh, get to know the price where it has been triggered and at what candle it has been triggered, and the range also. So many people get confused how to trade this bullish and bearish EP. Both the things, bullish EP and bearish EP, that means both call writers and put writers get activated on that particular event, on that particular day. Why? Because very huge volume will be generated and bullish EP and bearish EP will be generated. And first it comes bullish EP. I'll show you with the example, and we should know why the price moves opposite. First, before a real move, market creates liquidity. Market has to create liquidity. If it creates liquidity only, the direction it can come down or go up. So to create liquidity, how it is created? It has to induce retailers to enter into the trade, and they think it is going to go up and they get caught. That is the liquidity. Creating liquidity is big money with big amount of money. It pushes the market upside. Bullish EP is created and the bullish EP is created and the price moves up. And bearish EP is also created sometimes, and you have to notice when it is happening, the context. When it is happening at the resistance, you need to be careful. That is an episodic event. You need to be careful. I am going to explain that in my next slides. So, immediate first move will not be the real move. You should be aware of that. You should have patience to take the trade because you need to wait for the real move. What is the intention of the big player? You need to analyze it. So, only patience and sitting quietly will help you out. In this is a market deception, big hidden hand. The big player is the big bull, big money. Actually, what he is doing is he goes up to drag all these retailer traders. The retail traders enter into the market immediately after the big. How many times you might have seen the market gaps up and you tend to enter into the market. So, or if a big bar comes in the market, all of a sudden you try to press the button on that big bar and you get caught. So for that only, in on my rolling pivot reversal magic, I've coded for the big bar alert. So it is alerting you, do not act immediately. The big bar intention may be something, it will offload the things. Then you need to wait for that. This is the market deception and the hidden hand. So you need to educate yourself. You need to educate yourself and sit quietly. Do not fall into the trap. So, after bullish EP and bearish EP formation, price moved up first. That move got sold. Actual move came later. I'll explain you on the charts also. Here, what is the first move will be the market manipulation. See, big big bar comes. Same thing happened in the yesterday. The market gapped up. It gapped up from the previous day, 25,800 and hard, and where it has closed, it opened around 25,913 or 25. Then what will be your position? That is the manipulation, candlestick manipulation. So on this chart, yesterday I am on the call option of 25,800 call option. You can see this is the big bar standing out. And then EP was formed around, I am on the 15 minutes chart. EP was bullish and bearish both together as formed around 205. Then what you need to do, the intention of the market is to sell and rise. The big player push the market, offload, but the retailers enter into the market, get trapped. For that, first what I do, yeah, I make the balance line of 205. That is the balance line of EP 15 minutes, and also balance line of EP 5 minutes, even on the EP was triggered on the 5 minute, and the guideline is my low. So I keenly watch on an intraday basis. You can get around 11:30. You got the dip around this level, and my rolling pivot and Gan Hilo supported the entry there. If you would have taken the entry around 160, you would have been profitable. If you would have entered around this area, you would have got trapped because it is a premium price. You can see that is around 203, almost near the EP price. No, you are not going to enter into there, sit quietly, wait for the discount, and wait for the real move, real direction began after the 11:15, or then market started moving and you were into the profitable position. You can enter into the market. So why price goes up before falling? Institutions need buyers to sell. That is the thing. That institutions need buyers to sell. Liquidity. For us, there is no, for retailers, there is no problem. Liquidity is not a problem for retailers. Institution problem is liquidity. You must understand what is the problem of the institution. The problem of the institution is retailer, and the only institution can create a big bar, huge bar with big money. Why do they create? They create to offload. We are trying to enter into the big bar. That is not right. They push the price up to trigger buying and stop loss hunting. So this is institution versus retail, the divergence. What they do is buying frenzy. People enter. So that is the human psychology. When you see green only, you try to put money into the market. You try to invest in the market. When there is deep red in the market, you never, never, ever think of buying at the discount. You try to buy at the premium price. Actually, when there is a premium price, these institution players, they are quietly selling. You can see over here, he is sitting at the top and he is quietly selling, offloading. This is the market game. Actually, market players, they will do that. And that's how they create liquidity. They engage traders, retail traders, and few of them get deceptive, and they FOMO. FOMO is the most important psychology in the market, fear of missing out. The retailers fear that we are going to miss out this rally. They enter into the market hastily and they get stampeded. Don't do that. Don't do that. Understand the market dynamics. This is the market dynamics. The buy at low price, then you will be very good. So core market logic is before fall, price rises to sell. Before fall, Remember this? Price rises to sell, before rise, price falls to buy. Where? That is the question. Question you need to see for the historical resistance level or historical support level. There you need to keenly watch what is the price action, why this event is formed. Then, if you start doing that, then you will be a profitable trader and you will become wise trader. You will not do mistake. See, remember this, rise to sell, fall to buy. How traders get trapped is retailer sees breakout, buys at high. Smart money distributes. So they here he is the retailer buying at the big bar gets trapped. It dumped into the you can see it is a trap. It will fall into the pit. Here in this example, I am on the daily chart. Apply two indicators, my two indicators, option EP on underlying as well as rolling pivot reversal magic. See, here you can see a big bullish EP was created on 26,205. All of you should remember that. It started from the bottom 25,909 to 26,205. You can imagine how big it is. That is almost 200 points big. And later, next day, bearish EP was created. It did not get sold immediately. You can see alternating candles, three candles, bearish EP and bullish EP, alternating. That is an event has been triggered over here every month. If you remember, on November 20th also, Deepavali day, a bullish and bearish EP was formed, and the market moved higher to get it. Some news will be flooded into the market, and you retailers react to that news and they get trapped. So do not react to the news and see what has happened. What has happened? Why this EP has been triggered? On daily time frame, only on 26th and 27th, these EPs are triggered. Event has been triggered. There is no EP till now formed on the daily time frame. Intraday time frame is for intraday guidelines, not for daily. The bias, what did the market do? What I do is I mark the high and low of the candle and mark the balance line. The balance line is 26,015 and the balance line was 26,239. And when the price closed below the balance line, you can see on what day? This is on December 1st. You can see price confirmed way it started closing below that. And my rolling pivot immediately turned neutral and price started closing below the pivot and the market went down to 25,800 or 900 within that level. And again, second push was created in the market only to get sold, and it could not cross the balance line of the bearish EP. That's how you need to mark. And real trend direction began only on, let me see the date actually, only on 6th or something, on the 5th or the 5th of December, market started coming down. It was not a straight away fall. It came down, it broke below this low, bullish EP low, and then market made a low and again push back, creating that market is going to go high, and the EP formed. The balance line of the bullish EP is around 26,050. Now we need to keenly watch this balance line of the bullish EP, because the big players have taken discount. They have gone below this level to only to sweep the liquidity, and second time retested this level and now trying to move higher. If the market starts moving above the 26,015 bullish EP balance line, then we can anticipate for a reversal in the market till 26,239 to 26,100. We can anticipate. We need to see the deciding level is 26,015. Now, when the market moves above this, then we can consider to take position, long position with this. We can anticipate for some sort of reversal in the market. Suppose if it fails at this level, again the next down move will start in the market, because my rolling pivot, it is weekly balance and it has come down. Balance has come down and the price, one more balance has come down. 1, 2, 3. Now the price is sitting above the balance line. Balance line is 25,913. You can watch for that. So how to trade this? You have to wait for EP, whether it is near resistance or whether it is support when the EP is formed. Then you have to see first move rejection, second move only you need to enter into the market, because second move will give you confirmation of the direction. So second move is very, very important in the market. So concept you should understand, patience, that is the next thing, and you need to wait for the confirmation. Golden rule is first move is liquidity. You must understand, when there is a big bar formed, it is a liquidity bar. It will trap the retailers. Then you have to wait for the second move. And I have told you how the steps, what are all the steps I make in my trade. You have to do that. And when you get the direction after the second move, you enter into the trade with the help of rolling pivot reversal magic. So you should remember this. First memory, first move is liquidity. Second move is direction. If you memorize this, you will be profitable. Do not enter into the first move. You are not going to lose anything. You are sitting with your capital. If you deploy your capital only, you are going to lose money. Don't hurry yourself in the first move if it is a very big move. So final thought is, read intention, not excitement. Read intention. That is the intention of the big player. If the big bar is formed, the intention of the big player is to distribute. If it is big red bar is formed, this is the intention of the big player to accumulate. But patience helps. Always have patience. Trade the second move. So you should have trader maturity and wisdom. Discipline and intention you need to understand. Then only you need to meditate. You need to meditate and you have to trade with patience. Okay, friends, thank you very much. Final thought, let me take you to the uh, Nifty chart, the price action on yesterday. Price action on yesterday, for that I need to go to the 15 minutes. If I go to the 15 minutes, I'm getting the first, let me start with the 5 minute. My indicator is telling you, giving the EP. EP, because opening bell, when the market gaps up, both the call writers and put writers will be triggered. the action between the call rates. So it gives you automatically 25,925. Both the bearish and bullish EP are triggered. And what I do is I mark the low of the candle, low of the first 5 minute candle, high of the 15 minute 5 minute candle, and then find out the balance line. Finding out the balance line is calculate the low of the candle, high of the candle, and close of the candle, add together and divided by 3, you will be getting a balance line. I got the balance line as 184 or 142. You can see I got this balance line. And on the 15 minute also, I got one balance line around 184 or something. So if I turn the chart to 15 minutes, I'll get even another bullish EP and bearish EP. I calculate the balance line and I wait for that. I wait for that. See, if I waited continuously, waited actually, actual discount came around 11:30. The big player who pushed the market higher, he offloaded silently, and all these traders who have entered thinking that FOMO, the market is going to go, they got trapped. They won't stay in the trade. They will be losing, then they panic. They will know, they will not think about it. If the patient trader, if they would have waited for this level and waited, this is the procedure you need to do with the help of uh, rolling pivot. Let me put an alt V. How you can enter into the market with the rolling pivot, I'll show you. I will fine tune my, when I see the market coming to this baseline, I keenly watch on the still little bit lower time frame, 2 minutes. I'll change the time frame to 2 minutes, and price is coming near the baseline. This is my balance line, reference line, and I keenly watch. The price was coming. You can see three big sell bars. Usually three big sell bars, three levels of down move, and the market started stabilizing. Here you can see my rolling pivot turning into blue because price closed above this. Till that it was neutral. Neutral means from the red thing, it started showing neutral behavior. That is the thing. It is starting something reversal. In the context of this baseline 25,909, it was holding this level. Then the call option became cheap. Call option 25,000, let me take this 25,800 call option. You can see over here around 11:30, same time 11:45 it became cheap. It came ran up to 154, and this is the base reference line. There is little bit disparity between the underlying to the call option because any option, because time decay matters in the options. So time has elapsed from 9:15 to 11:45. 2 hours has been elapsed. Time decay will also be added, so it will go below the balance line. Little bit more of the more discount on the balance line. You should consider that it went up to 152. This is most important thing. And the rolling pivot, my rolling pivot got an entry around 166, and retest confirmation. You can see over here, price came back, retested. Either you can take aggressive entry keeping the stop loss, or retest confirmation and reversal you could have entered. The price was very choppy yesterday. How many times it has retested? You can see many times. One around 1 p.m., around 12:20 p.m., it made a double bottom, and the final move got established. The if you would have entered around 165, easily you could have cashed in 216. This is how you need to trade in the market. So to educate you people, this is the strategy. You can use it, and you should understand what is the intention of the big player, what you need to do, how you need to develop discipline. If you develop discipline methodically, if you trade, definitely traders, you will become profitable trader. You will trade along with the big money. You will try to understand the big money's big money intention. First, understand the big money intention, trade with them. So, thank you very much, friends. Nalinakshi Swami signing off.